What if I told you that millions of people are going into debt without even feeling like they borrowed money? No credit card. No bank loan. No warning. Just 4 small payments. A few taps. And a smiling app saying, 0 interest. Easy payments. Split it later. Sounds harmless. But behind the smooth design of apps like Klarna, Afterpay, and Affirm is a massive financial machine quietly changing how people spend, borrow, and survive. This is not just shopping anymore. This is invisible debt. And for many people, it starts with something small. A pair of shoes. A gaming headset. Groceries. A food delivery order. A phone case. Then another purchase. And another. And another. Until suddenly, you are juggling payments every week, without realizing how much money is already gone. The scary part? Many users don't even think they are in debt. Because by now, pay later doesn't feel like debt. It feels like convenience. And that is exactly why it is so powerful. Today, we are exposing the system behind BNPL. How it exploded into a multi-billion-dollar industry. Why companies want you to keep splitting payments forever. How late fees quietly grow. Why younger people are becoming dependent on installment apps. And the real math hidden behind the checkout screen. Because this is no longer just about shopping. It is about survival. And if you have ever clicked pay in 4 split payment or 0% interest, you need to understand what is really happening. Let's begin. Chapter 1: The Perfect Illusion. By now, pay later became popular for one simple reason. It feels painless. Imagine walking into a store. You see a pair of sneakers worth $200. Your brain immediately says, that's expensive. But then the app changes the number. Instead of $200, you now see, only $50 today. Suddenly, it feels affordable. Nothing about the product changed. Only the way your brain sees the price. This is one of the oldest psychological tricks in sales. Break the pain into smaller pieces. Humans naturally avoid financial pain. We hesitate when spending large amounts at once. But when payments become smaller, our brains relax. That hesitation disappears. And BNPL companies understand this perfectly. That is why the checkout process feels smooth, fast, friendly, almost fun. Bright colors. Minimal steps. No heavy financial language. No giant warning saying, you are borrowing money. Instead, the message feels casual. Just split the payment. Pay later. No worries. It feels closer to a lifestyle feature than a loan. And this changes behavior dramatically. Studies have shown that people spend more when using installment systems. Because the full cost feels emotionally distant. You stop asking, can I afford this? And start asking, can I afford the first payment? That single change is dangerous. Because affordability is no longer based on total cost. It becomes based on temporary comfort. And temporary comfort creates long-term pressure. This is where phantom debt begins. Debt that feels invisible. Debt that hides behind small numbers. Debt that slowly stacks in the background. One payment here. Another there. Maybe $20 next week. $40 next month. $15 tomorrow. Individually? They seem tiny. Combined? They can quietly destroy a budget. And many people never see the full picture until their bank account suddenly feels empty. Because BNPL was designed to remove friction. Traditional borrowing feels serious. Credit cards at least remind people they owe money. But BNPL feels soft. Easy. Invisible. And invisible debt is often the most dangerous kind. Chapter 2: How BNPL Took Over the World. Just a few years ago, most people had never heard of buy now, pay later. Now it is everywhere. Online stores, fashion apps, electronics, travel bookings, food delivery, even groceries. The growth was explosive. Why? Because BNPL arrived at the perfect moment. People were already struggling financially. Inflation increased. Living costs exploded. Wages stayed behind. At the same time, social media created endless pressure to keep buying. Every day people scroll through images of luxury lifestyles, new gadgets, designer clothes, perfect bedrooms, dream vacations. And slowly, shopping stopped being only about needs. It became emotional. People shopped to feel rewarded, to feel successful, to escape stress, to keep up. BNPL companies stepped into this environment and said, "You don't need the money now." That message spread incredibly fast, especially among younger generations. Many young adults distrust traditional banks. Some avoid credit cards. Some have low credit scores. BNPL apps position themselves as modern, friendly alternatives. No complicated paperwork. No long approval process. No intimidating bank offices. Just instant access. And merchants loved it too. Because when customers use installment payments, they often buy more. A shopper who hesitates at $300 may feel comfortable paying $75 today. That means bigger sales, more impulse purchases, higher profits. So stores aggressively pushed BNPL options. Sometimes the payment plan button is larger than the full payment option. That is not an accident. The system is designed to encourage financing. And then came the next evolution. BNPL stopped being used mainly for luxury purchases. People started using it for essentials. Groceries, medicine, utility bills. This changed everything. Because now BNPL was no longer just convenience. It became a survival tool. And when people start financing basic necessities, it often means deeper financial stress is already happening beneath the surface. Chapter 3: The Hidden Math. Now let's talk about the part many people never calculate. The real math. Imagine someone uses BNPL for 5 purchases: a pair of shoes, a jacket, a gaming accessory, groceries, and a phone upgrade. Each purchase feels manageable individually. $20 here, $35 there, $15 next week. But here is what happens psychologically. The brain tracks each payment separately, not as one giant debt. This creates a dangerous illusion, because total obligations become fragmented. Instead of seeing, "You owe $800," you see, "Only $25 due today." That changes behavior. People continue spending because each individual payment seems small. But eventually, multiple payment schedules collide. Monday, Wednesday, Friday, next Tuesday, next month. Suddenly money disappears constantly. Not in one painful hit, but through endless tiny leaks. And tiny leaks sink ships. This is how phantom debt works. It hides inside small transactions. Now add late fees. Maybe someone misses one payment, then another. Some apps charge fixed penalties. Others freeze accounts. Some continue stacking consequences. Even when interest is technically 0%, fees still generate profit. And the industry depends heavily on people failing occasionally. Because if every customer paid perfectly, profits would look very different. There is another hidden layer too. Overconfidence. Many users believe, "I can manage this." And sometimes they can. At first. But financial emergencies happen. Unexpected bills, medical costs, reduced work hours, family emergencies, inflation. Once income becomes unstable, small installment systems suddenly become overwhelming, especially when several payments overlap. This is why many people feel financially exhausted even when they are not making huge purchases. Because they are constantly servicing small debts. Their paycheck arrives already divided, before they even touch the money. Chapter 4: Why the System Feels Addictive. BNPL does not only change spending, it changes emotions. There is a psychological reward every time someone completes a purchase instantly. Humans love immediate gratification. Our brains enjoy getting rewards now. Waiting feels uncomfortable. Saving money takes patience, discipline, delay. BNPL removes the waiting period completely. You want something? You get it today. Future you handles the problem later. That creates a dangerous cycle. Because emotional spending becomes easier. Stressful day? Buy something. Feeling insecure? Buy something. Feeling left behind? Buy something. And because the first payment feels small, there is less emotional resistance. This is extremely powerful. Especially during difficult economic times. People are tired, overworked, anxious. Small purchases provide temporary comfort. But temporary comfort can create permanent financial pressure. And the apps are designed to keep users engaged. Notifications, deals, special offers, limited time discounts. The ecosystem constantly pushes consumption. Not financial peace. Consumption. Because the business model depends on continuous transactions. The more people buy, the more money flows through the system. That means companies have every incentive to encourage more spending, not less. This is important to understand. The app may look friendly, but its goal is not your financial freedom. Its goal is activity, purchases, transactions, revenue. That does not automatically make BNPL evil. But it does mean users must stay aware. Because convenience can slowly become dependency. And dependency is profitable. Chapter 5: When Debt Becomes Normal. One of the biggest dangers of modern finance is normalization. When something becomes common, people stop questioning it. Years ago, financing food sounded shocking. Now, it barely surprises people. That shift matters. Because once debt becomes emotionally normal, spending barriers weaken. People start viewing installment payments as part of everyday life. Not emergencies. Not exceptions. Routine. And routines shape entire generations. Many younger consumers are growing up in a world where almost everything can be financed. Phones, clothes, furniture, streaming devices, vacations, fast food. The danger is not only debt itself. It is losing the habit of waiting. Waiting builds discipline. Saving builds patience. Modern financial systems increasingly remove both. Everything becomes instant. And instant lifestyles often create fragile finances. Because emergencies require reserves. But many people have none. Not because they are lazy. Not because they are stupid. But because modern economies constantly pressure people to spend. Advertising never stops. Social media never stops. Consumer culture never stops. BNPL fits perfectly into this environment. It removes the final obstacle between desire and purchase: time. And when time disappears from spending decisions, impulse grows stronger. Chapter 6: The Data No One Talks About. Now let's discuss something extremely important. The numbers. Consumer protection groups and financial analysts have raised concerns about BNPL growth for years. Why? Because usage patterns reveal something deeper than shopping convenience. Many users repeatedly borrow for basic needs. That is not luxury spending. That is financial strain. Some reports showed users taking multiple simultaneous installment loans. Not one. Several. And because some systems historically had limited reporting standards, people could stack obligations across platforms. One app here, another app there, without fully seeing the total picture. This creates risk, not only for individuals, but for the broader economy. Because widespread consumer debt affects everything: stress levels, savings rates, mental health, economic stability. Financial pressure changes how people live. It changes sleep, relationships, confidence, decision-making. Money stress spreads into every area of life. An invisible debt is especially stressful because people often underestimate it until pressure builds. Then comes the emotional shock. How did I end up owing this much? But the answer is usually simple. Not one giant decision. Hundreds of tiny ones. Chapter 7: The Social Media Effect. There is another force fueling BNPL growth: social media. Every platform today is filled with comparison. People compare clothes, cars, phones, homes, vacations, bodies, lifestyles. And comparison creates emotional pressure. Even when people know social media is curated, it still affects behavior. Humans naturally compare themselves to others. That comparison often creates insecurity. And insecurity drives consumption. People buy things to feel accepted, successful, relevant. BNPL quietly supports this cycle, because it allows people to maintain appearances temporarily. Someone may not have enough money today, but the installment plan creates immediate access. This becomes dangerous when identity becomes connected to spending. Because now purchases are emotional, not practical. And emotional spending is difficult to control, especially when payments feel delayed and invisible. Social media influencers also contribute to normalization. Many creators promote shopping constantly. Hauls, unboxings, must-have products, trends cycles. Consumers feel pressure to keep up. And BNPL offers a shortcut. A shortcut that often leads to long-term pressure. Chapter 8: Who really profits? Whenever a financial system grows rapidly, there is one important question: who benefits the most? Stores benefit because customers spend more. BNPL companies benefit from transaction fees, partnerships, and penalties. Investors benefit when usage grows. But what about the average user? Sometimes BNPL genuinely helps. Responsible users may use installment systems carefully. Budget properly. Avoid interest. Stay organized. That is possible. But many people do not operate under perfect conditions. Life is unpredictable. And financial systems built around constant spending can become dangerous when economic pressure rises. Especially for lower-income users. Because a missed payment hurts someone earning little far more than someone wealthy. This is where critics argue the industry becomes problematic. Not because every user fails, but because the system heavily depends on people continuing to consume despite financial pressure. And the more stressed consumers become, the more attractive delayed payments appear. That creates a cycle. Economic stress increases demand for installment systems. Installment systems encourage more spending. More spending creates more pressure. And around it goes. Chapter 9: The Emotional Cost of Debt. Debt is not only financial, it is emotional. Many people carrying invisible debt experience constant background stress, even when they appear calm. Because unfinished obligations stay in the mind. Upcoming due dates, notifications, automatic withdrawals, fear of overdrafts. This creates mental exhaustion. And mental exhaustion affects decision making. People under financial stress often struggle with focus, sleep, energy, confidence. Money problems rarely stay isolated. They spread. Arguments increase. Anxiety increases. Shame increases. And BNPL can intensify this because the debt initially feels harmless. People do not emotionally prepare for the pressure until suddenly multiple payments overlap. Then panic begins. This is why financial education matters. Not to shame people, but to help them see systems clearly. Because modern finance increasingly relies on psychology. The smoother the system feels, the easier it becomes to overspend. Chapter 10: The Checkout Trap. Think carefully about modern checkout screens. Everything is optimized for speed. One-click purchases. Saved cards. Instant approvals. Fast financing. Why? Because every second of hesitation reduces sales. Businesses know this. That is why friction is removed. The easier spending becomes, the more spending happens. BNPL is one of the strongest friction removal tools ever created. Because it changes the emotional experience of buying. Instead of loss, you feel relief. Relief that you do not need to pay fully today. But delayed pain is still pain. Sometimes worse. Because future obligations accumulate quietly. And many users already operate on thin budgets. Meaning even small disruptions can trigger problems. One unexpected bill. One emergency. One reduced paycheck. Suddenly multiple installment payments become difficult. This is why many financial experts encourage people to pause before using BNPL. Not necessarily avoid it forever. But pause. Ask, would I still buy this if installment payments did not exist? That question alone can prevent many bad decisions. Chapter 11: The Illusion of Zero Interest. Zero interest sounds amazing. And technically, some BNPL plans truly do offer zero interest periods. But marketing language can still create misleading emotional impressions. Because users focus on what they are not paying, instead of what they are still risking. People hear, no interest. And assume, no danger. But debt without interest can still become harmful if spending exceeds income. That is the real issue. The problem is not always the interest rate. The problem is behavioral change. BNPL can increase spending frequency, increase impulse buying, increase payment complexity. And complexity creates mistakes. Especially for people already managing tight finances. Many users eventually lose track of payment schedules. Not because they are irresponsible. Because modern financial systems are becoming increasingly fragmented. Subscriptions, streaming services, food apps, installments, automatic renewals. Money leaves accounts constantly. And invisible spending is difficult to control. Chapter 12: How People Get Stuck. Most debt traps do not begin dramatically. They begin quietly. A small purchase. Then another. Then a difficult month. Now payments overlap. The user thinks, I just need one more installment plan to get through this month. And that sentence is critical. Because when borrowing becomes a tool for surviving everyday expenses, financial pressure is already serious. Then something else happens. People start borrowing against future income repeatedly. Meaning future paychecks become pre-spent. This creates financial fragility. the margin for error disappears. One unexpected problem can destabilize everything. This is why some users feel trapped. Not because one purchase ruined them, but because constant installment payments slowly consumed future flexibility. And flexibility is one of the most important parts of financial stability. People need breathing room. When every paycheck already belongs to previous decisions, stress grows rapidly. Chapter 13: The Business of Human Behavior. Modern financial technology companies study behavior deeply. They analyze spending habits, user psychology, patterns, timing. Because understanding human behavior is incredibly profitable. The smoother and more emotionally comfortable a payment system feels, the more people use it. This is not accidental. Entire industries are built around reducing psychological resistance. And consumers often underestimate how powerful design can be. Colors, notifications, button placement, checkout flow, language. Everything influences behavior. When apps say, only $12 today, your brain naturally focuses on the smaller number. That changes perception immediately. This is why awareness matters. Because modern consumer systems increasingly compete for attention, emotion, and impulse. Not just money. Chapter 14: The Generational Shift. Previous generations often feared debt more intensely. Today, debt has become deeply integrated into daily life. Many people grow up surrounded by financing systems, monthly subscriptions, phone plans, streaming services, installment payments, credit systems. As a result, continuous payments feel normal. But normal does not always mean healthy. A culture built around permanent monthly obligations creates long-term pressure, especially during economic instability. And younger generations already face rising housing costs, higher living expenses, economic uncertainty. BNPL enters this environment offering short-term relief. But short-term relief can create long-term dependence if spending habits remain unchecked. This is why financial literacy is becoming more important than ever. Because convenience technology evolves faster than human psychology. Humans still struggle with impulse control, emotional spending, future planning. Technology simply makes those weaknesses easier to monetize. Chapter 15: What the industry doesn't want you to think about. Here is the uncomfortable question. If installment systems are completely harmless, why are companies spending billions promoting them? Because they work. Not only financially, psychologically. They increase conversion rates, increase order sizes, increase purchasing frequency. That is extremely valuable. Again, this does not mean every BNPL company is evil. But it does mean users should stay realistic. No financial company survives by reducing consumption. The system grows when transactions grow. And consumers must protect themselves within that reality. The most dangerous financial traps are often the ones that feel harmless at the beginning. Because people lower their guard. That is why awareness matters more than fear. Understand the system. Understand your habits. Understand your emotional triggers. Because once spending becomes emotional, logic weakens. Chapter 6: How to use BNPL without destroying your finances. Now let's talk solutions. Because the goal is not panic. The goal is control. First, never use BNPL for things you cannot normally afford. If the only reason you are buying something is because payments are split, that is a warning sign. Second, track every installment payment in one place. Do not rely on memory. Write everything down. Because scattered payments create confusion. Third, avoid stacking multiple plans at once. One manageable payment may stay under control. 10 overlapping payments often will not. Fourth, be extremely careful using BNPL for necessities. If groceries require financing regularly, that signals deeper financial pressure. And deeper financial pressure requires a bigger solution than another installment plan. Fifth, pause before emotional purchases. Ask yourself, would I still buy this if I had to pay fully today? That question is powerful, because it removes the illusion. And finally, build emergency savings whenever possible. Even small savings create breathing room. Breathing room reduces desperation. And desperation is where dangerous financial decisions often begin. Chapter 17, The Future of Consumer Debt. BNPL is likely not disappearing anytime soon. In fact, installment systems may become even more integrated into everyday life. Why? Because consumers like convenience. Businesses like higher sales. Technology makes financing faster than ever. But the bigger question is this: what happens when entire economies become dependent on people constantly borrowing against future income? That is the deeper concern. Because sustainable economies require financially stable consumers, not permanently stressed consumers. And many households already operate near their financial limits. One recession. One major economic shock. One employment crisis. And invisible debt problems can spread quickly. This is why regulators and financial experts continue watching the industry closely. Not because installment systems automatically destroy people, but because rapid financial innovation often creates unintended consequences. Especially when psychology and spending combine. Chapter 18, The Real Lesson. At its core, this story is bigger than buy now, pay later. It is about modern consumer culture. A culture constantly encouraging people to buy more, consume more, upgrade more, faster, faster, faster. And somewhere in that noise, many people lose track of what financial peace actually looks like. Real financial freedom is not endless consumption. It is flexibility, peace, breathing room, the ability to handle emergencies without panic, the ability to sleep without fearing notifications and due dates. That matters more than temporary appearances. Because many luxury lifestyles online are financed, borrowed, leased, or deeply stressed behind the scenes. Comparison is expensive. And some people destroy their future trying to look successful temporarily. BNPL can quietly fuel that cycle. Which is why awareness matters. Not shame. Awareness. Because financial systems become dangerous when people stop questioning them. By now, pay later was marketed as freedom. Freedom from waiting. Freedom from full payments. Freedom from financial stress. But for many people, it became something else. A quiet system of invisible obligations. A system where debt feels small until it stacks. A system where future income disappears before it even arrives. And a system that thrives when people stay emotionally disconnected from the true cost of spending. Again, this does not mean every installment payment destroys lives. Used carefully, some people manage it responsibly. But the danger begins when convenience turns into dependence. When pay in 4 becomes normal for everyday survival. Because debt that feels invisible is still debt. And the modern economy is becoming increasingly skilled at making spending feel painless. So before your next checkout, pause. Look past the small payment. Look at the full picture. Because companies want you focused on today. But real financial stability depends on protecting tomorrow. If this video opened your eyes, share it with someone who needs to hear it. And remember, the most dangerous financial traps are often the ones disguised as convenience. Subscribe for more daily money tips to build wealth and achieve financial freedom.